at the end of the day, from the lender's perspective, it comes down to, is this a safe bet? Can the borrowers or the people purchasing the home, can they service the loan? Do they have the deposit requirements required to make an offer on the home? What personal and lifestyle factors does that lender look at in order to assess that loan as being safe?
So basically all the lenders work on what we call the triple C methodology, and that's basically around character, capacity and collateral. So with your character, obviously the banks are looking to make sure that, are you bankable? How do you operate your bank accounts? And is your credit rating squeaky clean? From a collateral perspective, obviously they're looking at your deposit side of things. Have you got sufficient deposit, at least 10% of the property's value, to invest in your first home? And what's the savings ability looking like? Has it been over a period of time, is what the lender's looking at. And then obviously on the capacity side of things, the bank's looking to make sure, what's your external debt levels looking like? How do you operate your bank accounts? It's just making sure that you're in the strongest possible position. Serviceability is the key, in addition to your character and also your deposit. That's the key message. We need to make sure that clients are aware that they need to achieve these goals in order to get their finance approved.
As an advisor, what information would you give to a borrower around how they can actually streamline the use of their account so that it does look more favourable, so that they are in the best position to get lending from a bank?
I think it's making sure, Paul, that the clients are actually managing their accounts effectively. So at the end of the day, we're wanting to make sure that they're operating their accounts in such a way that doesn't look sloppy. So they're not overdrawing their bank accounts unnecessarily when they don't have arranged overdraft facilities. It's just making sure that the volume of transactions are managed, because the banks look at all of those aspects when they make a decision, particularly on that character piece, to ensure that you are operating your accounts well. So it's just giving them a bit of guidance, particularly on the external debt side of things as well too. A lot of first home buyers do carry a lot of external debt, so a lot of that has to be managed quite closely before you get in the position where you're ready to presenting an application to the bank at that stage. So it's just managing that and guiding as much as possible.